This is the Asia Trade. I'm Paul Allen in Sydney. The top stories this hour. Asian stocks set to open higher after Wall Street posted back-to-back gains on signs President Trump is rethinking his most combative stances on trade and the Fed. US stock futures, though, fluctuating after the latest Oval Office news conference. And the president saying the US is in daily contact with China on trade, and a new tariff rate could come within weeks. But the president denying reports of possible changes to levies on cars and auto parts. And we're back live at the Shanghai Auto Show. We'll be hearing from the NIO CEO about how the trade war is impacting their business plans. However, let's get started. Breaking news out of South Korea. We've got GDP for the first quarter, and it is a contraction of 0.1%. So South Korea's economy contracting, I beg your pardon, that's 0.2% in the first quarter. That did miss economists' median forecast of 0.1% growth. A couple of reasons for this. Firstly, all the political turmoil around that failed martial law decree at the end of last year. Also, rising trade tensions as well. That caused a 14.3% drop in shipments to the US in the first 20 days of April. So we might see that impact rolling on into the second quarter. So that surprise contraction in South Korea's economy, underscoring the fragile state of business activity. And this is even before we've seen exporters absorbing the full force of the trade war turmoil. So just to recap for you, South Korea's GDP in the first quarter contracting 0.2%, rather than the very modest growth that most economists were anticipating. All right, let's look ahead to what we can expect when markets open. We've got futures currently indicating a modest contraction in Japan, about 0.25%. We are expected to open higher here in Australia. However, FTSE China futures also in modestly positive territory. We do have a positive lead-in from the US, though most of the indexes were higher there. S&P better by 1.7%. The Nasdaq leading the way by 2.5%. Did have some encouraging tech earns out of the US. IBM reporting better than expected revenue and profit. Texas Instruments was out with a strong set of numbers as well. So seeing some modest positivity for US futures. S&P futures up by 0.1%. Similar story for Nasdaq futures as well. Bond futures creeping up also. A little bit of optimism around the bond market as well, with longer dated yields slipping. PIMCO suggesting that bonds are starting to look attractive. The oil price, though, slipping again. We've got OPEC Plus hinting at production increases. There's some tensions with Kazakhstan. We might get into a bit of detail on that later, but does raise concerns of a supply glut. Iran's also looking at cutting May crude prices for Asian customers as well, so a bit of softness for the oil price there. Well, exhausted traders once again sifting through fresh comments from President Trump on trade after a wide-ranging news conference at the Oval Office. Trump says the US is in daily contact with China on tariffs, and they might get a new rate in the coming weeks.
How soon do you want to bring the tariffs on Chinese goods?
Well, that depends on them. If we just set the tariff, it's something that we think that will happen, I'd say, over the next couple of weeks. Wouldn't you say? I think so. Over the next 2-3 weeks. China has been judging us massive tariffs for many years.
Let's bring in Bloomberg senior editor now, Ramsey Al-Rikabi. Ramsey, so the president there saying that the US and China in daily contact on trade doesn't really reflect what we're hearing from China. But what developments do we have in terms of any movement, concrete movement forward?
Hey guys, morning. I apologize. I don't know if we can give you too much in terms of the concrete movements that Trump is making with China. His comments today appear to be part of a broader effort to sort of lower the temperature and ease a lot of anxiety in the markets with China, and his comments on Powell. As you saw today and yesterday, we had the signaling from the White House through Bessent from Trump that they want to de-escalate with China. They're going to bring tariffs down and try to ease some of the biggest fears folks have about where this could be going. Keep in mind, this all comes at a time when the IMF has downgraded its global forecast for economic growth. Same for the U.S., pushing it below 2% growth because of these trade tariff wars that that Trump started with the world, and now he's focusing on China. You put that in combination with him walking back his comments on Powell, and you get the sense that a lot of this is really about easing a domestic market and easing market participants and sort of making people get a sense that we're stepping back from the cliff.
And we had a little bit of confusion earlier as well. There was a report from the Financial Times that there might be some exemptions for car makers and makers of car parts as well. But then in that press conference a little later, President Trump appeared to contradict that. What do we know here?
We, like many things that come with these tariffs in terms of the exemptions, they were almost on a whim. They come after consultations with people in business. So, for instance, the tariffs with China coming down, that came after conversations with Walmart and Target and Home Depot executives. After that FT report came out about lowering tariffs on parts, Trump, sort of tried to avoid it, said they might even go up, and changed the subject, talking about Canadian car imports. It's the signaling from the White House, at least from Trump, can be rather chaotic, and I think that adds, not only if he's trying to ease markets, I think the thing that they really want to see is certainty. Uncertainty is the thing that a lot of these tariff comments have brought, even if they sound positive. The inconsistency is what I think is driving the markets crazy and driving investors crazy.
Well, one of the things we can be sure of is Japan is definitely one of the first in line for a conversation with the US around trade and reaching some sort of deal. And we've heard from Scott Bessent saying that currency targets are not a feature of those Japan talks. What's he saying?
Well, that's right. The FX situation with the yen and the trade talks, they've already said they're kind of going to be on a separate track. And then today at a roundtable, he was asked directly what sort of FX, yen target there is, and he mentioned when he meets with Finance Minister Kato tomorrow and others from Japan that he doesn't have a specific target in mind, which I think must be a relief in Tokyo. But we'll see what happens tomorrow after they meet and what sort of message both of them bring out of those meetings.
All right, Bloomberg senior editor Ramsey Al-Rikabi there. Well, Bloomberg MLive strategist Mark Cranfield now joins us now for some market context from Singapore. And Mark, as Ramsey was describing there, some more soothing rhetoric coming out of the Oval Office today. And we did see the US dollar strengthen, stocks rally as well. But considering how dependent markets seem to be on news flow at the moment, how sustainable does this rally look?
Not very, I would suggest. As Ramsey said there, chaotic conditions are not what investors need, particularly if you're a medium-term, long-term portfolio manager. You need things to be a little bit clearer. Our colleague in New York, Cameron Christ, was writing overnight that the realized volatility on the S&P 500 is getting close to 60%. We've never seen those kind of levels except during the global financial crisis and the Wall Street crash in the 1930s. So that shows you how extreme these kind of day-to-day swings are that we're seeing in the most important financial index in the world. Now, the only way for this to resolve itself is either we go through a quiet period, a few weeks of limited trading where volatility gradually dies because the ranges are smaller, or the market needs to decline substantially to take out that extreme level of volatility. One or the other needs to happen. And when you see that the trade talks so far have been pretty inconclusive, there seems to be a lot of changing of mind about what they mean, where they're going to be imposed. Investors are not going to take this well. They're going to take a defensive approach, and that likely means that US equities need to decline further. That will be the outcome that resolves this extreme period of price action, which is unsustainable. It cannot go on like this without big things breaking. And the way for that to happen is for money to gradually ease out of the markets and for US markets to lose their premium over the rest of the world. We're already beginning to see flows into Europe, into China, parts of Asia. That is likely to continue, and the result also will lead to a weaker US dollar as well. Even though Mr. Bessent might not have a clear target for the yen himself, financial markets seem to have decided, investors seem to prefer the idea that the US dollar is still overvalued and it needs to adjust, with the yen, the euro and the Swiss franc the main beneficiaries of that. That is likely to continue for a while. So this theme of sell American assets looks as though it still has quite a way to play out unless we have a very quick resolution to all the trade talks, which doesn't seem to be on the cards for now.
Yeah, certainly UBS is out with a note today as well, with dollar weakness continuing to be a theme there. Although we have seen yields on some of these longer dated US notes starting to fall a little. PIMCO saying that, looking attractive. What message is the bond market sending here?
It's still a very mixed signal. I mean, to be honest, investors listening to this wouldn't expect anything else from PIMCO. PIMCO is a fixed income fund manager. What else are they going to do with their money apart from buy bonds? So you would expect them to be supporting the market. Steepening of the curve is the bigger theme here. It has flattened slightly this week, but every US Treasury auction continues to be a landmine. We have a big one coming up next week, which is a 10-year auction to get through. Every auction this week has been pretty dicey. They've had to cheapen up the yields. Even the 5-year last night, which is usually a very easy one to sell, they had to squeeze some extra yield out of the market to make it go through. There's a 7-year tonight, which is going to be pretty tricky as well. Foreign investors are the key to this, and that's where people will get the idea whether they really support the US yield curve or not. Most likely, they will stand back until yields are very attractive and the curve is much steeper, to compensate them for the fact that if the US continues on this policy path, investors will be expecting the major rating agencies to downgrade the United States. It seems inevitable that there will have to be, the fiscal situation in the States is unsustainable, the trade situation is unsustainable. They need to stop the growth. The growth projections in the United States are getting lower and lower. That means that it will affect the credit rating. People are starting to price that in, and the simple way to do that is to steepen the US Treasury curve, which ultimately means that long-end yields will need to go higher.
We also heard some remarks from President Trump about Jay Powell today. Of course, it was 24 hours ago that he said that he had no intention to fire Jay Powell, and now Trump's saying, look, he might pick up the phone and call him regarding rates. I mean, it's a bit of a tightrope act here for the Fed chair. It does suggest, though, that the two haven't spoken yet. What's the path ahead for Jay Powell here? How does he react?
It's an extremely difficult situation for everybody at the Federal Reserve when you have the president speaking so often. It's a very unusual situation. People in the central bank in the United States are not used to almost daily messaging coming from the White House. They're usually left alone to do their job, set monetary policy, and once in a while they report to Congress, usually twice a year, to give them an update. That's usually as far as it goes. The big question for investors is the independence of the central bank in the United States. So far, President Trump has not addressed that at all. He speaks about Mr. Powell on a personal level. He does not speak about wanting to sustain Federal Reserve independence. That is what investors want to see. That's what they have been relying on for years and years. If they don't get that clarification, again, it will mean there has to be a discount for US assets, particularly for treasuries and the US dollar, because that is where foreign money assesses every country based on partly whether the central bank can make decisions for monetary policy based on the data it sees, not by looking over its shoulder to see whether the president thinks it's good or bad. Foreign investors need that clarity and reassurance that the Federal Reserve can make its decisions based on the data it sees and do its job. For the time being, that is not a clear outcome.
All right, Bloomberg M Live strategist Mark Cranfield there. Let's get to earnings from SK Hynix out of South Korea. Another blowout quarter for the chip manufacturer in the first quarter. The quarterly profit soaring 158%. That beat estimates. Operating income 7.44 trillion won. That's about $5.2 billion. That exceeded estimates as well. This is the fifth consecutive triple-digit rise that that we've seen in quarterly profit from SK Hynix, all really driven by demand for high bandwidth memory chips, which are, of course, critical for AI. SK Hynix is a key supplier to NVIDIA as well. So we've got the company maintaining its forecast for high bandwidth memory demand, sees it doubling this year from 2024. Still, though, a lot of uncertainty around tariff policy going forward. Still to come on the Asia trade, we're going to be talking credit with Goldman Sachs and unpacking those SK Hynix first quarter results a little bit more with Daiwa Securities. Also, Endowus, Asia's leading digital wealth platform, is going to be joining us to discuss their investment strategy. This is Bloomberg. Let's check in on how U.S. Treasury futures are tracking, because, of course, we have had some soothing rhetoric coming from the White House in the past couple of days. Of course, U.S. President saying he's not inclined to fire Federal Reserve Chair Jay Powell anymore, also suggesting tariffs on Chinese imports could drop, but we'll wait and see for a little bit of clarity there. But we're seeing some modest uptick in expectations in bond futures. Let's get over to our colleague Shery now, who's joining us with our next guest, Shery.
Yeah, let's discuss everything to do with the Treasury space, credit as well. Bring in our next guest who says concerns about a financial crisis amid the recent bond market dysfunction looks overblown. With us now is Lotfi Karoui, Chief Credit Strategist at Goldman Sachs. Really good to have you here in the Tokyo studio.
Thanks
I know that this is not the most comfortable chair, but we have really seen this huge instability in the Treasury space. Are we losing some of that edge that U.S. bonds used to have?
It's definitely felt like that the last, week and a half to 2 weeks, which is it's unusual to see this positive correlation, I guess, between yields and risk assets. And so from that perspective, if you own duration expecting that it would provide you with a hedge in a bad state of the world, it hasn't really worked out great, at least locally when you look back at the last 10 days. Now, there's been a number of explanations as to why that's been happening. One, as you said, the plumbing of the market or the function of the market has been blamed a little bit. It's really hard to find that in the data, but you do see, some measures of funding have sort of deteriorated a little bit, but not nearly as much as in some of the previous episodes, like March 2023 with the regional banking crisis or COVID. So it deteriorated a little bit, but not too much in my view.
So nothing like what we saw with gilts, for example, in 2022?
No, this is not an LDI October 2022 style type of moment in my view. And by the way, if that were to happen, then I would think that the Fed actually has the ability to intervene. And I think has to be a little bit of a distinction between managing the level of yields, which you should let market forces do that. But then as far as the plumbing or the microstructure of the market is concerned, I think there's a wide range of tools that the Fed can use if things were to deteriorate further.
The whole narrative this time around has been really the appeal of U.S. assets waning, right? Will this be a concern going forward?
Could be. I mean, there's definitely been some erosion of the notion of U.S. exceptionalism, and I think that has manifested itself into the performance of the dollar mostly, but also in the Treasury market. To that, I would add two things. One, you are heading into a period of a gross slowdown, and the magnitude of that slowdown is TBD. We don't know how much yet, and I think the next 2 months are going to provide a lot of clarity, but you're going into a slowdown with a very large budget deficit. And so that's an uncomfortable value proposition for investors, and that has contributed a little bit to the backup in yields. Two, there are question marks around foreign participation for sure, and I think those question marks are unlikely to abate anytime soon.
Does the demand that we saw for the 5-year auction perhaps soothe some of those concerns?
Absolutely, and in fact, when you look back, I'd like to think of that 3-year auction as another catalyst that sort of exacerbated the moves. Since then, we've had 2 auctions that were a lot more orderly for sure.
Not to mention that President Trump seems to be paying more attention to the bond markets, more than equities these days.
There seems to be greater sensitivity, I guess, to the price action in the bond market relative to the equity market, for sure.
What are we seeing in terms of the plumbing in the corporate bond space?
Much better, actually. And again, this is another big difference between this episode and what we saw in March 2023 and certainly COVID. But the plumbing has held up dramatically better. I mean, you see it in measures like bid-ask spreads, measures of depth of the market. Of course, those have widened a little bit, as you would expect in a period of elevated volatility. But once you sort of account for that, as violent as the price action, had been, it's been fairly orderly in my view, meaning that risk has moved in a, pretty orderly fashion.
You've actually revised your expectations for wider investment-grade bond spreads, right?
Yeah, we got there.
You think that, and you still think that the risks are skewed to the downside?
Yeah, a little bit. Look, I mean, we went from almost all-time tight levels in the dollar market to levels that are still below the medians of the last, 25 to 30 years. So we've definitely rebuilt a bit of premium. Now, the question is, if there's another leg wider, it would have to be driven by slower growth. And I really think that for now, we're kind of stuck a little bit in a range. I don't think we'll go back to those tight levels. But the next 2 months are going to give us a lot of clarity on the extent of the damage from this uncertainty.
How much wider?
From current levels, we do envision something like 50 basis points in the high-yield market. But if the outlook were to deteriorate a lot more, we would certainly revise that even wider.
Are you seeing more investors being discerning even within the different sectors, especially when you talk about these tariffs hitting certain products?
So I think eventually, once you have clarity on the tariffs, it will catalyze a lot of dispersion. And that's true across sectors, but in my view, it's also even more true within sectors. So if you take the auto industry, there'll be winners and losers within that same industry. But right now, and this may seem a little bit paradoxical, what we've seen is actually the opposite a little bit, where dispersion has been coming down. And I think it speaks a little bit to the nature of the sell-off, where it's been fairly indiscriminate. You just sell what you can sell in bad times. But eventually, I don't disagree with you that once you have full clarity on where policy is heading, it will catalyze a lot of dispersion.
You're here in Japan today. Are you seeing anything or hearing anything from Asian borrowers perhaps pulling back, a little bit more concerned about the bond markets in the U.S.?
Oh, definitely a lot of question marks, for sure, but also a lot of questions about how to position your portfolio, given that we're sort of entering this new phase in the cycle. The one key word that came up all the time was diversification. Give me sources of diversification if you're building sort of a multi-asset fixed income portfolio. I tend to think that private credit, for example, is a source of diversification in late cycles, particularly if you look at, asset-backed finance, where you're getting a risk profile that is less correlated from sort of the ebbs and flows of corporate earnings or the business cycle, but a lot of focus on diversification for sure.
Yes, so much focus these days on private credit. It's really great to have you with us, Lotfi Karoui, joining us here in the Tokyo studio, Chief Credit Strategist at Goldman Sachs. We do have more ahead. This is Bloomberg.
Time for morning calls now ahead of the Asia trading day, and PIMCO says it's starting to see opportunity in treasuries after a sell-off sparked by concerns over President Trump's trade policies. Its core strategies CIO Mohit Mittal told Bloomberg that treasuries start to look attractive in the 5 to 10 year point, given the US economy is likely to slow longer term. UBS Investment Bank has cut its dollar forecast for the second time in under 2 months, citing the US-China trade war as a key factor. Its strategists predict the euro will rise to 123 against the dollar by year-end, with the yen at 130 per dollar. The dollar index has fallen about 6% this year, and the UBS strategists now see it as a pro-risk currency rather than a safe haven. Right, let's look ahead to the open in Japan, South Korea, Australia as well. Futures looking to be in modestly positive territory in Australia, a little bit of flat in Japan. More in a moment. This is Bloomberg. Well, let's take a look at the SK Hynix earnings that we had out a little bit earlier. Another blowout result for the South Korean chip manufacturer. Profits soaring 158%. That is the fifth straight triple-digit rise that we've seen in profit. So that profit itself, operating income, $5.2 billion. That's 7.44 trillion won. Revenue rising to 17.64 trillion won as well. That is SK Hynix's second highest quarterly performance, and that was on the heels of record revenue and operating profit in the prior quarter. So let's get a little bit more on this with our next guest. SK Kim is Executive Director and Analyst at Daiwa Securities. SK, a blowout set of numbers here. I just want to start by getting your initial response to what we've seen this morning.
SK Hynix announces some upbeat the market expectation. So I think that the upside is coming from DRAM. So especially the shipment growth, the actual result is higher than previous the company's guidance. So which means that we see the more stage of the high valued product, such as the HBM and DDR5. But on the other hand, NAND flash business remain weak. It's in line with our market estimate.
How much of what we have seen today can you put down to front loading and around fear about the tariff uncertainty? Are these sorts of numbers going to be sustainable in future quarters as the clouds around the trade war gather?
Clearly there's some food in demand from the tariff issue, but also at the same time there's some additional demand from the DeepSeek, in the demand from China, and also the China government, the stimulus measure, that is some we see some the higher demand for commodity memory, and. According to the company, as the data point, they already guided for the higher shipment growth for the second quarter. It's almost double-digit growth for both DRAM and NAND flash. So which means the power of the strong result will continue in second quarter as well.
Certainly, under normal circumstances, that increased demand from China would seem encouraging. But considering that the changes that we're seeing on trade and tariffs and the news flow that comes out of the White House is quite unpredictable at the moment, how challenging is it to make accurate forecasts about future quarters for SK Hynix and other chip makers as well? That's correct.
But recently we see some concerns on the tariff was easy, and also some AI demand seems to remain relatively solid. So originally AI demand is a little bit safe from this tariff issue. Because of even the AI demand is now it's from everywhere, and so the concern is more about some the second half is for the commodity side, because of which it's unexpected demand concentrated in the commodity DRAM. But HBM is a the Hynix they're leading in HBM. So they are relatively, their revenue portion of HBM is way higher than other supplier. So in that perspective, the SK Hynix is, I think their earnings and performance will rather depending on the AI. So which means some roadmap of the NVIDIA GB300, which will use 12 high HBM3 product. And also, I rather see some potential risks from some export control from the U.S. government, and relatively we can say the AI demand is a lot comparable and more visible compared with the commodity side. In previously the second half.
Definitely the story around AI-driven demand seems very robust. But you mentioned DRAM a little bit earlier. How about DRAM demand as it's connected to some of those more traditional markets like PCs and smartphones? How do you see demand in that sector?
Yeah, so overall, the PC smartphone demand remain is weak. We can say it's stable. It's not that strong. But this year, clearly the replacement cycle for PC because of the Microsoft will stop supplying support for the Windows 10. So we already see some signal of the replacement cycle demand from the PC. And the smartphone is a little bit the question mark. But I think that the iPhone, this year, Apple, while there's uncertainty in U.S., but Apple is working with the Chinese local AI companies such as Alibaba and preparing AI the models for China market, so that will result in some higher shipment, and also some the positive numbers from Chinese smartphone maker early this year. So yeah, some AI on-device AI demand is cautiously anticipating late this year, but we see more visibility in the PC side now.
SK, before we let you go, I just want to get your thoughts on the share price outlook for SK Hynix, because if we take a look at its performance over the past year, it's been a wild ride, but it's essentially flat on year. We've got short selling of SK Hynix at a record. What's your price target for this stock? Our target price is 267,000 won. So we still see some upside close. It's way higher than like more than 40%. The reason the weakness is come from the short selling ban in Korea. So some short selling from the end of March. And also, one of the reasons is that the share price of Micron is a key competitor in the Nasdaq. Micron share price is down so much, so now the valuation gap between SK Hynix and Micron is quite narrowing. So that is kind of pressure on the stock price until now. But Hynix they showed that it's a strong earnings performance. It's based on the leadership, and then according to some research from the SK Hynix, they achieved #1 market share position in DRAM, recently. So if there is some uncertainties there, and maybe Korea government and US government, they would discuss on the tariff maybe tomorrow. So we will see, but hopefully. The better situation for the semiconductor industry, and then I think there's upside in the share price. There's some buying opportunity for investors. All right, SK, we'll have to leave it there. Thanks so much for joining us. That is SK Kim, Executive Director and Analyst at Daiwa Securities. Well, IBM's shares fell in late trade on results that weren't strong enough to quell investors' concerns that tariffs and federal cost cuts will dent the company's business. Bloomberg's US tech editor, Andrew Pollock, joins us now for more. So, Andrew, the stock move didn't seem to match up with these solid earnings results. What's happened?
Well, I think over the past few months, investors have seen IBM as sort of a safe haven in that the stock price has increased 12% while the S&P's been down and most big tech companies have been down. And so I think they were looking for a little more. One of the analysts said that they expected the results today needed to be picture perfect. And when they weren't, investors were disappointed.
So what were some of the other key takeaways?
I think if we look at IBM's consulting business, that was down 2% in the quarter year over year. and that has been soft. And I think that's an area of the business that could be hurt more by the global economy if the U.S. especially goes into a recession. There's a greater concern there for IBM's business. You know, the company is no longer a big hardware company. I mean, more than 50% of the revenue comes from software, and the software business seems strong, but the consulting business particularly has been a concern.
All right, Bloomberg's Andrew Pollock there on IBM's results earlier today. Well, let's get the latest now from the corporate front. Shares of Texas Instruments jumped and extended trading after better than expected forecast for the current period. The company says revenue could reach as much as $4.5 billion as demand for industrial and automotive components improves. The forecast is a promising sign for the chip industry, even as it braces for looming tariffs on electronic products. TSMC says it plans to begin production using its cutting-edge A14 fabrication process in 2028. Company executives say the new technology will help improve power efficiency and performance. TSMC remains confident industry revenue will top $1 trillion by the end of the decade as AI chip designers embrace new production technology. Apple and Meta have been fined nearly $800 million by the European Union for violating antitrust rules. The penalties are the first to be imposed under the bloc's Digital Markets Act. The punishments are far lower than previous penalties under traditional EU competition laws. The companies must comply with the EU decision within 60 days or face additional fines. Well, let's take a look at Japanese assets now. We do have Bank of Japan maybe potentially delaying rate hikes with a lower terminal rate as well. The IMF has certainly been encouraging the Bank of Japan to take a look at its tightening schedule with a view to the broader global macro environment around trade in particular. But if we take a look at the yen, that's been on an interesting journey this week. It's weakened again. We're back at 143.17. Really a story of dollar strength after some soothing rhetoric from the White House. Not only does Jay Powell appear to be safe in his job for now, but some conciliatory sounds coming from the Oval Office today about the potential to reach a trade deal with China. President Trump saying that the two countries are in contact every day. Looking ahead to the Open in Japan at the top of the hour, we've got Nikkei futures looking quite positive now, better by 1.2%. We have more ahead on the Asia trade. This is Bloomberg. The latest from the corporate front, Gucci's first quarter sales fell 25% as efforts to revive Kering's biggest brand again failed to yield signs of a turnaround. Luxury brands are experiencing tepid growth, and the escalating trade war has darkened the outlook for the industry. Kering expects improvement in the second half after tapping Balenciaga's former artistic director to be the next Gucci designer. Louis Vuitton has raised the price of one of its most popular handbags in the US after President Trump imposed a 10% tariff on goods from the EU. The never full GM bag and monogram-coated canvas now costs $2,200. That's a $100 increase. The Bernstein analyst says not all Louis Vuitton goods are affected, as they do make some products in the US. Boeing says it's prepared to find alternative buyers for about 50 of its planes originally bound for China that are now stuck in a trade dispute with the US. CEO Kelly Ortberg says the company is in close communication with its Chinese customers. The plane maker reported a first quarter cash burn of $2.3 billion as it ramped up jet production well below the $3.4 billion that was expected by analysts. President Trump says he is not considering changes to tariffs on autos and auto parts. And while most Chinese automakers don't export to the US, the subject of tariffs still looms over the Shanghai Auto Show. Bloomberg's chief North Asia correspondent Stephen Engel joins us now with more. So, Stephen, been a weird morning on the tariff front again, dare I say it. We did have that report from the Financial Times saying could be some car makers exempt. President Trump saying not so. Where is this heading?
Well, it's on people's mind, obviously, because China is overwhelmingly the king of the supply chain for the automobile parts. And that's, all those fancy EVs inside the halls behind me get all the headlines, they get all the cameras, and they get all the bloggers that are out, of course, showing off the latest technologies in autonomous driving and self-parking and all that. But the car parts is the nuts and bolts, literally and figuratively, of the global auto industry. So a lot of people were talking about where are we going on the tariff front on the auto parts, because Bill Russo of Automobility told me that essentially Americans don't really fully grasp how much China has been inside cars globally for years, and changing that supply chain is going to take years. It doesn't happen overnight, and will shift to other parts of the world. Chinese manufacturers will shift, but it's going to take a lot of time, and that's going to incur a lot of costs on particular American consumers in buying cars. So yes, we're talking about parts, we're talking about new technologies and the like. And also keep in mind that if anyone had any doubt that China is the leader in innovation in the automobile space, all they have to do is go inside and check out the latest models that are coming off the assembly lines and will soon be available here in this market. Questionable, obviously, in the U.S. market when that will eventually happen. But Bill Russo was also telling me essentially that this is going to be the monumental year where new energy vehicles will finally surpass the sale of internal combustion engine cars here in this market. And this is the world's biggest automobile market, so that is quite a sizable jump for NEVs here. They jumped exports last year, or not exports, deliveries of new energy vehicles jumped 47%, whereas internal combustion engines were down 5%. And Bill says this is the year that finally EVs take over ICE engines.
Well, we did, NIO is one stock that we saw move higher on Wednesday on a suggestion that, there might be some potential relief on tariffs when it comes to China more broadly. You've been speaking to the NIO executive. What's he been saying?
Yeah, William Li is the founder and chairman. I spoke to him yesterday. They've tried for years to reach profitability. They're still sort of doubling down that NIO will hit break-even or profitability by the end of this year, and that they'll double sales. But the first few months have been not kind to NIO. They are re-examining their European strategy. They initially went into 5 fairly high-cost countries because they were basically marketing their product as a luxury product. So they went into a lot of the Scandinavian countries. But again, they found the cost structure. They underestimated the complexity of selling their cars and marketing them and distributing them in those 5 European countries. So they're re-examining their brand export plans, I should say, for Europe. They're going to be launching their sub-brands, Firefly as well as Envo, into Europe, as well as many other countries, including Singapore, likely later this year, with a whole new distribution channel using partners instead of going it alone to contain costs. Here's a small portion of my conversation with the founder and CEO of NIO.
In the next 3 years, our focus will undoubtedly remain on the Chinese market, as China is the world's largest and fastest growing market for smart electric vehicles, which is also the most competitive. As a company founded in China, we must secure a sufficient market share in our home market and achieve sustainable operations. This year, we have launched 9 new products. Our chips, for example, can increase our gross margin by 4 to 5%. Additionally, we are making significant efforts in managing sales expenses and enhancing the efficiency of R&D costs. Therefore, we are very confident in achieving profitability in the 4th quarter of this year.
So I knew your new brand, Firefly, you're going to be concentrating on Singapore and other markets, including Europe, UK. How are you going to change the model there? Because you did go into 5 fairly expensive, largely Nordic countries in Europe, and you said you underestimated the cost structure there. So how are you going to change that cost structure at a time when there are tariffs as well?
Firstly, the tariffs will indeed impact our overall business plan. However, on the other hand, our new model Firefly is designed specifically for small car users. From a product perspective, it's very suitable for markets including Europe. The global market for small cars is approximately 20 million units. We will change our ways of cooperation. In the past few years, we have operated directly in 5 European countries. However, we will now collaborate more with local partners. We will have one partner in each country for long-term cooperation, leveraging their capabilities to expand our presence.
How are you going to stand out in the domestic market? You're doing the battery swapping technology with the Firefly. Are you in active discussions with partners? I know you have talks with CATL, but others. Who are going to be those who will help shoulder the immense costs of spreading across all the provinces in China?
We have invested in 3,275 battery swap stations in China for the past few years. This year, we have an even more ambitious plan. We aim to build battery swap stations in every county across the 27 provincial-level administrative regions in China. That means adding at least 1,000 more battery swap stations this year. This will certainly be a significant capital expenditure. First, we changed our approach this year by working with local partners in China, which will handle the construction of the stations. We have built partnership with more than a dozen companies. We will then rent the battery swap stations from them, which can help reduce our capital expenditure.
Bloomberg's Stephen Angle there speaking to William Lee, the CEO of NIO at the Shanghai Auto Show. We'll be hearing from Stephen again later this next hour. Got some breaking news out of Japan. Meanwhile, it is PPI services number for the month of March, coming a little bit better than expected, 3.1%. PPI services for the previous month also revised higher to 3.2%. Seeing a chart of the yen on the screen there, that's been weakening again, but a wild ride for the yen this week, 143.13 at the moment. We did hear from the US Treasury Secretary Scott Bessent saying that the US isn't seeking currency targets in trade talks with Japan. The yen softening and perhaps more of a story of dollar strength as much as anything else. So we've got more ahead on the Asia trade. This is Bloomberg. Let's check some of the stocks to watch when trade opens in Australia, South Korea and Japan shortly. An obvious move is going to be SK Hynix, another blowout result there, operating profit jumping 158% due to a global race in AI and stockpiling perhaps ahead of US tariffs. On that note, watching car makers as well. We had a Financial Times report that some automakers might be exempt from tariffs. President Trump ruling that out. It's up to you what to make of all of that. Nintendo also seeing overwhelming demand for the Switch 2 in Japan. Market opens in Sydney, Seoul and Tokyo next. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens as investors really digesting right now mixed messages coming from President Trump on those tariffs for China. But Paul, we saw some softening, though, of his stance in the criticism against Fed Chair Powell. So we had a little bit of a rally in the overnight session.
Yes, that's right. That did at least cheer markets that Jay Powell isn't going to be fired. Trump also saying at a wide-ranging press conference a few hours ago that he might pick up the phone and give Jay Powell a call. He still wants to see rates lower, so this question over Fed independence hasn't really gone away yet.
For the time being, though, really calm seems to have returned a little bit to the markets. We have seen the dollar also rebounding from that 15-month low. And on the other side of that trade, we saw that pressure on the Japanese yen overnight, especially given that we also heard from Secretary Bessent talking about the fact that there were absolutely no currency targets in the conversations with trade negotiators from Japan. You can see a little bit more of a rebound early in the Asian session. The Nikkei extending those gains that we saw in the previous session as well. Of course, we continue to digest also news around the IMF, really urging the Bank of Japan as well not to rush in with its rate hikes and really be more flexible on its monetary policy approach. We had producer price for Japan coming in just a few minutes ago, surprising a little bit to the upside, gains of 3.1%. Of course, it's really all about tariffs and trade negotiations. Take a look at how Korea is also doing right now, because we also had some mixed messaging when it came to auto tariffs for auto parts as well, mixed media reports as well. President Trump backtracking on potential changes on those tariffs, but the auto sector is so big for the South Korean market. We're seeing the Kosdaq gain 0.2%. Of course, we're following SK Hynix, that jump in profit. We just had the earnings, and it was more than 150% or so. A lot to do, of course, with that stockpiling by really its customers ahead of those risks coming from U.S. tariffs. It is warning of potential more uncertainty in the future, but it seems to be that really leaders at SK Hynix are still optimistic about the AI demand outlook, Paul.
Well, let's take a look at how we're tracking here in Australia in the first couple of minutes of trade. Of course, the staggered open here, so hard to get a read on things, but the early trend certainly positive. The broader index better by a little more than 0.1%. Once again, materials doing reasonably well, and we have seen some of the big mining names in Australia performing well, among them BHP, perhaps on the news flow that the tariff situation might see a little bit of relief around the corner. The Aussie dollar backing off some of the highs that we saw yesterday, still showing some modest gains there, about 63.6 cents against the greenback at the moment, Shery.
Joining us now is Hugh Chung, CIO at online wealth management and digital advisory platform Endowus. Really good to have you with us. So we've seen perhaps a little bit of calm returning to the markets, but given, of course, the ongoing uncertainty over tariffs and just the broader macroeconomic picture, where are you seeing really clients really look for safety in the markets when even treasuries have been really volatile?
Yes, good morning, Shery. Thanks for having me on the show. I think for clients are looking for alternative ways to get exposure to markets outside of U.S. equities. So we are really seeing some interest within Asian equities. We're also advocating looking at different segments of the U.S. market, including healthcare and small caps as well. But outside of equities, we also feel like real assets, particularly a focus on infrastructure, can provide some stability because infrastructure tends to have lower sensitivity to GDP growth. And then if you look at the bond market, I think high quality or IG short to mid to short duration bonds actually provide some good safety as well. And lastly, I think we're seeing quite a bit of interest in alternative assets, so different sources of alpha either through hedge funds or private markets.
Yeah, I've seen a lot of exuberance over private credit as well. Are these some of the sectors that investors are looking at right now, and where are the opportunities?
Yes, I think private credit, particularly within private assets, has really been where the interest has been, given the relatively higher base rates. We have seen, kind of more instruments like evergreens that clients could have exposure to. So there's continued to be quite a lot of interest for private credit in that area, particularly focused on U.S. private credit.
What's your outlook for rate cuts at the moment? Because, of course, we did hear from President Trump again saying that he wants to see rates lower. But if you're in Fed Chair Jay Powell's shoes right now, what's the greater concern? Is it still inflation, or is growth starting to be nipping at the heels of the inflation worries?
Yeah, I think, it's interesting because over the last few weeks, that kind of pendulum has shifted a little bit towards inflation versus growth, because at the earlier part of the year, it really was growth repricing. And I think my outlook for the Fed is that they will likely stay put for the time being, because it's really difficult to go either way. I think the dual mandate of the Fed either is very, very important, and then unless you see some really, really serious cracks in the labor market, I think it's very difficult for the Fed chair to be aggressive with rate cuts. So I think over the near term, it's more likely that we see rates put on hold.
And what's your outlook for the US dollar linked to that as well? We've seen a little bit of strength over the past 24 hours, but do you consider that that's going to be enduring, or is there more weakness to come?
I think the vast majority of market observers have been very bearish on the dollar over the last recent weeks, and I think for good reason. But if you look at the the US dollar, or the DXY index, which is the dollar versus the rest of the world, compared to the U.S. rates, compared to all the major other countries out there, there's been a pretty wide divergence, because normally they move very, very close to each other. And I think that divergence has come from loss of credibility of U.S. assets and U.S. dollar in particular. And I think as we see that uncertainty fade a little bit, I do think that that gap will narrow, and I think we're seeing some signs of it already. So I would not be too bearish on the dollar. I actually think that it's much better for individual investor to actually match their liabilities and assets, as opposed to take a specific view on currency. So I would actually guard against being too bearish on the dollar.
When it comes to Asian equities, for example, we have seen, of course, that negative correlation with, for example, Japanese stocks and Japanese yen. Anytime the yen strengthens, we see this weakness in the equity space. So how do you factor for currency fluctuations in this very uncertain environment?
Yeah, I mean, actually, over the last few weeks, we've seen quite a lot of odd moves out there, because as you rightly pointed out, lower the yen or lower the won, all these export countries would benefit, and normally U.S. dollar, has that impact. But I think what we've seen recently has been overwhelmingly more, sentiment driven as well. So, normally in risk-off environments, emerging markets and Asian markets tend to underperform developed markets. But it's interestingly, Asian markets have actually fared better than global markets overall year to date. So I think we're seeing a confluence of different impacts to markets as well as the economy. So it's very difficult to just take one aspect like currency and have a view on the markets itself. I think we really need to look at the overall situations, what the valuations look like. And I think for people to take a more constructive view, we just need the volatility to come down and calmness to come back.
All right, Hugh Chung, CIO at Endowus, thanks so much for joining us today. Let's take a look at how car makers are tracking in the early going in Asia, because it's been an unusual few hours there. We did have a report from the Financial Times that President Trump was considering reducing car part tariffs. President Trump himself later ruled that out in the Oval Office. He says, no, we're not considering it now, but at some point tariffs could go up. He was referring there to Canada, so a bit of a mixed picture for the car makers at the moment, but we are seeing some modest gains for Toyota and Honda, some modest declines for the Korean car makers Kia and Hyundai. Shery.
Take a look at how some of those tech names are trading across Asia as well. Of course, SK Hynix has just announced profit that jumped 158%. Early in the session, we're seeing some downside, perhaps a little bit of sell the news. We were expecting SK Hynix to do pretty well, given, of course, that they are a key supplier to NVIDIA. We have seen a lot of stockpiling ahead of those U.S. tariff risks. SK Hynix now really warning of macro uncertainties ahead, but they still kept their forecast for HBM demand to double in 2025. So not to mention that they could benefit also from South Korea's planned $23 billion in support packages for the semiconductor sector. For more on SK Hynix, let's bring in our Asia equities reporter Sang-mi Cha. Sang-mi, so bearish bets now seem to be surging a little bit after we heard that earnings announcement.
Yes, Shery, that's correct, and it's what the investors were pretty much expecting. It's going back to a little bit in March 31st. That was when South Korea lifted the months-long short-selling ban on its stocks in Kospi, and that has resulted in a lot of that short sales collecting in SK Hynix stocks. We have seen it heading towards the monthly record. Now we've seen about 1.5 trillion won worth of short selling on the SK Hynix stocks, and that's about $1 billion. And separately, there was 2.9 trillion won of overseas institutions selling those shares in April alone, and that is the traders are saying that that's because of the outlook on the AI capex spend in U.S. and that also coincides with the DeepSeek, which has raised a question about the low costs in the semiconductor sector. So all of that, plus the tariffs uncertainty in the semiconductor sector, is weighing on the stock. So the stock is it had doubled over the past 2 years, but now it's about 20% down from a January high.
Well, we heard from a guest in the last hour, SK Kim of Daiwa Securities. He had quite an aggressive price target for SK Hynix, substantially higher than where it is now. But how difficult is it to create outlooks and predictions at the moment in this environment of such uncertainty around tariffs and trade?
That's correct, and a lot of the HBM chip was the driving factor of this rally in SK Hynix stocks earlier, and that has resulted in a little bit of that bump after the recession fears and again the tariff woes. But again, some of the investors are saying that sticking to the reports is not the earnings reports is not really the best and most important factor when it comes to trading SK Hynix, because it could actually mean that a lot of the investors would rather sell and cash out further because this is a better chance to take profit. And that's despite the fact that the market watchers were watching the replacement of SK Hynix when it comes to Samsung being the top DRAM vendor. And so all of this, we'll have to watch. A lot of volatility in the market, but we'll have to watch the shares closely.
Bloomberg's Asia Equities Hangmi Cha there with the latest, of course, on the SK Hynix stock, which has still gained only about 4% this year. Take a look at Nintendo gaining 4% just in today's session, and really we could be headed towards the biggest device launch in video game history. Nintendo now seeing overwhelming demand for Switch 2 here in Japan. It's received 2.2 million applications for the lottery sale. But remember, the caveat has been hit by the trade war. About a third of the units are assembled in Vietnam, which obviously was hit with that 40+% tariff before the U.S. gave it a 90-day pause. We have more ahead. This is Bloomberg.
How soon do you want to bring the tariffs on Chinese goods?
Well, that depends on them. We just set the tariff. It's something that we think that will happen, I'd say, over the next couple of weeks. Wouldn't you say? I think so. Over the next 2-3 weeks. China has been judging us massive tariffs for many years.
As President Trump there speaking about China tariffs. For more on this, let's bring in news desk editor Jill Desis. So President Trump there saying that, well, they speak with China every day on this. Any signs of concrete progress, though?
No, I mean, Paul, I think what you're seeing here now, right, is this kind of U-turn on China play out really before our eyes in front of these cameras here. I mean, you've got Trump who, obviously has this 145% tariff on China, plus, various other, punitive measures, that he's taken here, saying that China needs to come to the negotiating table. Well, we don't really have a ton of evidence that we've got concrete negotiations happening between the U.S. and China right now, other than Trump there musing, that, they need to come to the table maybe we'd give them a good deal. But it does kind of show you this really tremendous pressure that is built, not just because of all the volatility that we've seen in markets, in the bond market, some of that pressure on the dollar, but also a lot of the kind of feedback that Trump has really gotten on these really enormous tariffs here. You can kind of see, sort of his thinking here evolve on that almost in real time. I mean, a lot of this sort of walk back on China, or this indication that tariffs could come down fairly substantially on China, is coming just in the wake of a meeting that Trump actually had with a lot of major retailers in the United States just a couple of days ago. He was meeting with representatives from Walmart, from Home Depot, from Target, from these other, massive retailers, kind of warning Trump of the really kind of, near calamitous effect that tariffs could have on the economy, on sort of, consumer demand and that kind of thing. And now you've got Trump saying that, there's, maybe room to negotiate there with China. But again, all of this is just kind of uncertain and in flux until we actually see some concrete progress. That's a long way of answering your question, Paul. But ultimately, yeah, I mean, we're still waiting on some kind of tangible sign of, the idea of China and the U.S. inching toward a deal here.
Yeah, it's sort of getting confusing now, trying to really gauge where President Trump is at the moment. But what is happening with cars now?
Yeah, so the latest that we've got is there's a report in the Financial Times indicating actually that Donald Trump is considering exempting car makers from some U.S. tariffs. The idea would be that this would come on car parts from tariffs imposed on imports from China to counter fentanyl production, ultimately coming, potentially in the wake of a lot of warnings from car makers. Again, Trump is, obviously taking meetings with a lot of different representatives from a lot of different industries. He's indicated over the past couple of weeks that you could see some industries exempt from some tariffs here. And so it seems like, again, according to some of this Financial Times reporting, that potentially you could see some of those additional exemptions come down for car parts. Maybe that gives U.S. automakers a reprieve. But again, all of this remains completely uncertain, as you're kind of seeing, again, Trump work through this in real time. And we've still got plenty of other tariffs that are still on the table, some affecting other automakers, some affecting other industries. And then, of course, you've still got this looming deadline potentially ticking down for the return of those reciprocal global tariffs on a bunch of different countries that Trump is obviously, currently in the process, him and his team are currently in the process of negotiating.
Yeah, Bloomberg's Jill Deasy is there with all of that back and forth around tariffs from President Trump. The subject of tariffs, of course, still looming really large over the Shanghai Auto Show. Bloomberg's chief North Asia correspondent Steve Van Engel joins us now. Steve, what are we seeing as we head towards this big event?
Well, obviously, the tariff issue is front and center and on many people's minds in the halls behind me here on day two of the press day of the Shanghai Auto Show. Clearly, auto parts is just as big, if not bigger, an issue for the American car makers as they try to navigate, obviously, their now more difficult supply chains. Keep in mind, China makes so many parts to the automobiles and that those tariffs of now 145% would apply to those as well, making obviously American-made cars as they procure from China much more expensive down the road. So it is a key issue, obviously. As for China, they're sort of, they've already said publicly that they're going to fight this to the end, and until there is a negotiated settlement on the eventual level of tariffs, they're pushing ahead with rolling out many new vehicles and trying to build out their available markets that are not named the United States. Now, on the auto parts issue, as it relates to Donald Trump, what we are assuming to be a bit of a flip-flop, because the FT was reporting that he could exempt some of those auto parts, but then in the Oval Office later essentially said, no, that's not the plan. In fact, they could even go up on places like Canada, which also ships auto parts to the United States. So yes, I agree with what Jill said, and Shery, what you said. It is a bit confusing, and day to day we are kind of headline surfing to see what the prevailing wisdom is right now. But Bill Russo of Automobility, I talked to him yesterday about the parts issue. He's the former Chrysler head in China many years ago. He knows about how Americans rely on the China supply chain. This is what he said about what those tariffs are going to do to the American car companies buying from China.
You don't replicate a multi-tiered supply chain. It's not just moving one part. It's moving all the parts that go into a subassembly into a system that then has to go along with that. So it's not building one factory, it's building a whole network of supply chain in other markets. It will happen. There will be regionalization. But a lot of that will have to be Chinese companies investing overseas, which makes them go global even faster.
Now, I've covered a number of these auto Shanghai and auto Beijing over the years, and it used to really be the American and European companies coming to China to see how they could build out their markets in this country. It is a role reversal now. The GMs and the Fords and others keeping a fairly low profile as they navigate this geopolitical and economic uncertainty here in this market, with GM losing market share, Ford losing market share, even Tesla losing market share. The Europeans a little bit more high profile. They're having an auto symposium with some executives from VW, Mercedes, BMW, and the like this afternoon here in Shanghai. Actually, it's starting this morning to figure out how they can not only sell into China, but also how they can also live and coexist with Chinese potentially coming in greater numbers into the European market.
Steve, you mentioned a moment ago China's intention to fight to the end on the matter of tariffs. How is the Chinese car industry moving to tariff-proof its industry?
Yeah, I think that's the main emphasis right now. Clearly, there is overcapacity, and there is obviously profitability issues. One of the assessments I saw was that only 2 of the pure EV players in China are actually profitable. So the companies like XPeng, like NIO, they've been seeking profitability for years, but they've had to really invest. Like NIO tried to invest in Europe, but they said they underestimated the cost structure and the ease of entry there, so they have, profitability has evaded them for many years. So they need to really focus right now with that excess capacity into the domestic market, and that means rolling out in the halls behind me new models, many new models. You're not seeing the foreign automakers rolling out a lot of new models. Tesla, by the way, is not even here, and that's been one of the big issues, that Tesla has not rolled out any new models for many years in this market. So they need to roll out new models, new innovation, new tech gadgets to really build out this domestic market, and then find those China plus one sourcing and distribution and manufacturing bases outside of China.
All right, Bloomberg, Stephen Engel there at the Shanghai Auto Show. We have more to come on the Asia trade. This is Bloomberg.
Take a look at how European futures are trading after 2 sessions of gains. We are seeing some upside of 0.2% for the Stocks 50. Of course, we had that risk rally overnight. Really not only that we just got a little bit of a mixed messaging when it comes to China tariffs from President Trump, but he's also eased off on the criticism on Fed Chair Powell. And we saw a little bit of a rebound in the U.S. dollar. Right now, the euro gaining against the greenback. This is Bloomberg. Take a look at how Japanese assets are trading early in the Asia session. We're watching the yen, seeing a little bit of strength against the U.S. dollar. In the overnight session, though, we saw significant weakness. The dollar rebounding, sort of a relief rally after we saw those technical indicators suggesting that overshoot of bearish dollar bets. Of course, the dollar fell to the lowest since December of 2023. We continue to watch specific sectors of the Japanese market, especially with the Nikkei now up 0.8%. We're seeing broad upside across carmaker, newsmakers, we had a report from the Financial Times about potentially some auto tariffs from President Trump being reduced, especially when it comes to imports from China. But President Trump walking that back, saying that he's not considering any changes to tariffs on autos and auto parts. So we're still trying to digest what that exactly means. At the same time, of course, we're trying to look ahead to the trade negotiations ongoing between Washington and Tokyo. U.S. Treasury Secretary Scott Bessent saying that the Trump administration will not pursue specific exchange rate targets in talks with Japan. Let's bring in Bloomberg senior editor Brian Fowler for more on this. And Brian, of course, that also pressured the yen in the overnight session.
Yeah, but it's a message, Shery, that I think is very much in line with what Japan would say. First of all, year to date, the yen has gained more against the dollar than any currency except the Swedish krona. So it's going in the right direction for both parties. Japan would like to see a slightly stronger yen to cool import inflation. The U.S. wants to see a weaker dollar, stronger yen to boost its exports. And those two men will both meet later in the global day, probably in about 13, 14 hours from now. And I would expect to see them say something very similar to what Bessent said: markets should determine rates, and maybe pretty much leave it at that. And I think it's a message that says the way things are going right now is the right way for everyone.
And I guess it also eases the pressure off the Bank of Japan to have to hike rates faster. And the IMF, I guess, agrees with that.
Yeah, exactly. So the IMF comes out and says that the BOJ should be flexible and very data dependent. And that's also very much in line with what we've heard from Governor Ueda thus far. He's stuck with his stance that the BOJ intends to normalize policy with rate hikes if data come in line with forecasts. But he's also emphasized that tariffs have created massive uncertainties, and that's his way of saying that he needs more time to assess the impact of tariffs. It's another way of him saying he's going to very much be data dependent. He's going to wait and see what the data look like before he makes any decisions on policy changes.
And Brian, what are economists saying about the outlook? Are perceptions changing?
Yeah, I think very much so. So we had our BOJ survey published just this morning, and it showed that economists have pushed back their expectations for rate hikes. Of course, no one expects a move the next time they set policy on May 1st. But up until now, many had thought there would be a move by either June or July. Those have been receded somewhat. 25% now still expect a possible hike in July. Another 25% sees a possible hike in October. But they all acknowledge that the BOJ may actually have to stay on hold all throughout the rest of 2025. They've also lowered their forecast for the terminal rate in this cycle to 1%, whereas just last month they saw 1.25%. So very much a flatter rate hike path than we saw before.
And of course, we're headed all towards the trade negotiations between Finance Minister Kato and Scott Bessent now.
Yeah, and that's going to come tonight. And I don't expect a huge deal on trade overnight, but maybe some progress. I think it's in the interest of both to at least convey some sort of progress was made.
Yeah, we'll be watching what that means also for the markets and how the Japanese yen reacts, right? Paul?
All right, Bloomberg senior editor Brian Fowler there. U.S.-listed stocks of Chinese companies rose on optimism the trade tensions with the U.S. may soften. For more, let's bring in our China correspondent Min Min Lo. So Min Min, we've seen a lot of policy whiplash from the U.S. administration. How are Chinese markets expected to fare today?
Well, if you look at what happened overnight, it was a sea of green in the NASDAQ, Golden Dragon, as well as some of these U.S. ETFs tracking Chinese stocks. And it's really the relief coming through when it comes to the potential lowering of tariffs that Trump has said could come in 2 to 3 weeks' time. There you go. And if that momentum continues, we could see a third day of gains in Hong Kong after we came back from Easter Monday. We're also seeing interesting moves in the yuan because despite the rebound in the dollar, we're also seeing the yuan gaining yesterday as well, up about 0.25% against the US dollar. Yeah, you can see USD CNY cross there. And this is interesting. Despite the weakened fix from the PBOC, we're seeing the yuan gaining strength, and again, perhaps because of the optimism around those trade deals. And I also want to point out the PBOC briefing yesterday indicated that yuan settlements have been gaining traction in March, with more than 50% of cross-border settlements being made in yuan when it comes to cross-border activity that are taking place within China, and overseas settlements made in foreign currencies by Chinese individuals and entities have fallen from over 70% to just about 40%. So again, it's part of that PBOC's plan to internationalize the yuan, and we are seeing a big jump in yuan demand also coming from mainlanders that are investing in the Hong Kong stock market because of the better valuation of some of these Hong Kong stocks against their onshore peers.
And amid this backdrop, really, China perhaps emerging as a safe haven, especially when it comes to the credit market, given the ongoing ructions around trade.
Yeah, it's an interesting phenomenon here that China unexpectedly, the credit market is really becoming this safe haven here, and we are seeing a record issuance of panda bonds. These are local currency securities issued by foreign institutions, a record $4.1 billion worth of issuance so far this year, which is the highest since Bloomberg started tracking this data in 2014. And we are seeing more foreign investor appetite for these bonds as well. Expectation is that that trend will continue to hit about maybe $30 billion in issuance this year, and some of that funds outflow from the U.S., given the market route there, could possibly find its way into China. And this comes as Beijing is also planning to issue its first batch of special sovereign bonds today, totaling about 286 billion yuan over 3 tranches. Those are funds that will be channeled to fund that fiscal package that was first approved in March to support the economy. And that's why we are seeing yields in China, unlike what's happening in the rest of the world, yields in China actually tightening. So it makes sense that companies are taking advantage of the low yield environment, the low funding rate, to issue more bonds at this time.
Bloomberg China correspondent Min Lo there. As we continue to watch the broader Asian markets as well, we are seeing some broad upside when it comes to the Nikkei. Of course, some of those automakers gaining ground on potential reports that we might see some relief for car makers, especially when it comes to imports from China. We are seeing the Kospi to the downside of 0.25%. We had seen their GDP for the first quarter contracting, missing expectations. Tariff threats an issue. Political tensions, of course, have been an issue as well. SK Hynix, despite reporting operating profit that jumped 158%. We're seeing a little bit of pressure on today's session, and you can see the ASX 200 gaining about 0.5%. Broadly speaking, of course, we had some risk rally in the overnight session, so we'll be watching the US dollar as it's steady at the moment after that relief rebound overnight. This is Bloomberg.
Let's get the latest now from the corporate front. Gucci's first quarter sales fell 25% as efforts to revive Kering's biggest brand again failed to yield signs of a turnaround. Luxury brands are experiencing tepid growth, and the escalating trade war has darkened the outlook for the industry. Kering expects improvement in the second half after tapping Balenciaga's former artistic director to be the next Gucci designer. Louis Vuitton has raised the price of one of its most popular handbags in the US after President Trump imposed a 10% tariff on goods from the EU. The Never Full GM bag and monogram-coated canvas now costs $2,200. That's a $100 increase. A Bernstein analyst says not all LV goods are affected, as they do make some products in the US. Boeing says it's prepared to find alternative buyers for about 50 of its planes originally bound for China that are now stuck in a trade dispute with the US. CEO Kelly Ortberg says the company is in close communication with its Chinese customers. The plane maker reported a first quarter cash burn of $2.3 billion as it ramped up jet production, well below the $3.4 billion expected by analysts. Well, Chinese electric car maker NIO says the Trump tariffs will impact its overall business plan as it looks to launch brands in Europe and Southeast Asia. CEO William Li spoke to us at the Shanghai Auto Show and told us that despite those expansion goals, its key market is still at home.
In the next 3 years, our focus will undoubtedly remain on the Chinese market, as China is the world's largest and fastest growing market for smart electric vehicles, which is also the most competitive. As a company founded in China, we must secure a sufficient market share in our home market and achieve sustainable operations. This year, we have launched 9 new products. Our chips, for example, can increase our gross margin by 4 to 5%. Additionally, we are making significant efforts in managing sales expenses and enhancing the efficiency of R&D costs. Therefore, we are very confident in achieving profitability in the fourth quarter of this year.
So I know your new brand, Firefly, you're going to be concentrating on Singapore and other markets, including Europe, UK. How are you going to change the model there? Because you did go into 5 fairly expensive, largely Nordic countries in Europe, and you said you underestimated the cost structure there. So how are you going to change that cost structure at a time when there are tariffs as well?
Firstly, the tariffs will indeed impact our overall business plan. However, on the other hand, our new model Firefly is designed specifically for small car users. From a product perspective, it's very suitable for markets including Europe. The global market for small cars is approximately 20 million units. We will change our ways of cooperation. In the past few years, we have operated directly in 5 European countries. However, we will now collaborate more with local partners. We will have one partner in each country for long-term cooperation, leveraging their capabilities to expand our presence.
US is out of the question for the foreseeable future, right?
We set up our R&D center in San Jose when our company was founded in 2015. Over the past decade, we made tremendous investments in the US. However, it's quite challenging for a Chinese company to sell cars in the US. We must face a geopolitical reality.
How are you going to stand out in the domestic market? You're doing the battery swapping technology with the Firefly. Are you in active discussions with partners? I know you have talks with CATL, but others. Who are going to be those who help shoulder the immense costs of spreading across all the provinces in China?
We have invested in 3,275 battery swap stations in China for the past few years. This year, we have an even more ambitious plan. We aim to build battery swap stations in every county across the 27 provincial-level administrative regions in China. That means adding at least 1,000 more battery swap stations this year. This will certainly be a significant capital expenditure. First, we changed our approach this year by working with local partners in China, which will handle the construction of the stations. We have built partnership with more than a dozen companies. We will then rent the battery swap stations from them, which can help reduce our capital expenditure.
What's your take on news that regulators are going to increase scrutiny on self-driving and autonomous driving? You have NOP+, so how does that affect your development or rollout of eventually beyond level 3 autonomy?
We believe that reducing accidents and improving safety are the most important foundations of intelligent driving. That's why we primarily focused on enhancing active safety capabilities for the development of our end-to-end models last year. We are the first in the industry to establish such safety active system, creating a closed loop from vehicle data to cloud-based training.
That's NIO CEO William Li speaking to Bloomberg's Stephen Engel at the Shanghai Auto Show. Let's check in on how Korean car makers are doing. Been an interesting day around the news flow for car makers. The Financial Times initially suggesting there might be some relief from tariffs for car makers and parts manufacturers. The president later ruling that out. Seeing a bit of optimism for Kia. Hyundai Motors, though, off by 0.4%. We will have results from Hyundai a little bit later on. Expected to see solid profits there, thanks to favourable exchange rates. Operating profit expected to be 3.5 trillion won. Strong pre-tariff demand in North America suggests operating profit could exceed market expectations. And of course, Hyundai does have a plant in the US state of Georgia as well, which may partially offset any impact from tariffs. Shery.
And Paul, take a look at some of those chip stocks across Korea and Japan. SK Hynix operating profit jumping more than 150%. A positive outlook for AI demand. The CFO saying that direct exports to the U.S. are not necessarily a high risk, but it's difficult right now to assess the tariff impact accurately. And you can see Samsung Electronics falling with SK Hynix. But a little bit of caveat, SK Hynix rallied 4% in the previous session as well. So perhaps a little bit of sell the news. We're also following these Japanese chip makers because Advantis, for example, is expected to report earnings on Friday. They're expecting strong sales growth. DRAM chip testers could have done well, especially with that demand from HBM chips for artificial intelligence. Other tech stories that we're following right now, shares of Texas Instruments jumped in extended trading after a better than expected forecast for the current period. The company says revenue could reach as much as $4.5 billion as demand for industrial and automotive components improves. The forecast is a promising sign for the chip industry, even as it braces for looming tariffs on electronic products. TSMC says it plans to begin production using its cutting-edge A14 fabrication process in 2028. Company executives say the new technology will help improve power efficiency and performance. TSMC remains confident industry revenue will top $1 trillion by the end of the decade as AI chip designers embrace new production technology. Apple and Meta have been fined nearly $800 million by the European Union for violating antitrust rules. The penalties are the first to be imposed under the bloc's Digital Markets Act. The punishments are far lower than previous penalties under traditional EU competition laws. The companies must comply with the EU decision within 60 days or face additional fines. We have more ahead. This is Bloomberg. We have breaking news out of South Korea. The government authorities have indicted ex-President Moon Jae-in for alleged bribery, according to local media Yonhap. Of course, we had heard that he had been summoned by authorities as part of an investigation into allegations of bribery related to his ex-son-in-law's appointment at a Thai airline. And we're now hearing from Yonhap that the President Moon Jae-in has actually been indicted. And remember, South Korean presidents have faced imprisonment, impeachment, or both after leaving office. Yoon Suk-yeol was just ousted. We're headed towards another presidential election in the start of June. Only 3 out of 8 democratically elected presidents in South Korea have not been impeached or jailed, but we're now hearing that Moon has been indicted. You can see a little bit of a mixed picture when it comes to Korean assets, Paul.
Well, the founder and CEO of Shanghai-based consultancy Automobility says President Trump's tariffs may have far-reaching and unexpected consequences across supply chains. Bill Russo told us more about the impact on Chinese parts makers and other industry players.
In the near term, without massive reinvestment in manufacturing overseas, and a lot of that's going to be Chinese companies going global, that's the unintended consequence of slapping tariffs on without a policy that guides investment. Because what will happen is the Chinese companies who dominate that supply chain will start building their factories all around the world in order to avoid the country of origin tariff.
Right. We're already starting to see that as well, you know, the China Plus One strategy. But what do you think those other markets where they can sell these products, end markets like Southeast Asia, like South America, like Africa, like the Middle East, can make up for whatever potential loss that they could have had in the United States?
Yeah, it's sleeves out of your vest. It's volume you didn't have. You haven't sold into the U.S. So you prioritize other markets. You prioritize Southeast Asia, Global South, Africa, Middle East. And by the way, in Europe also, because Europe may have put tariffs out there as bargaining chip, but Europe isn't trying to block China. In fact, there are many European dealer groups here this week shopping for Chinese partners to source electric vehicles from.
What do you think of the rumors or the the beginning of the minimum price mechanism to replace perhaps those tariffs that the EU put on them in the first place?
I don't think that, first of all, it doesn't hurt the Chinese company. It actually gives them better pricing. They get better margin. So they don't mind. It raised the floor for us. That means we don't have to fight at the bottom of the pyramid. That means we get better margin. It doesn't do anything. It may give the overseas companies less of a price gap to have to compete with. That's, I think, the logic of it. But the problem with that is it's actually rewarding the company you're trying to slow down with better margins. I don't see how it helps companies get competitive on the things they're lacking, which is the ability to source competitively priced technology.
So on the parts front, I guess you're saying that it's been extremely counterproductive for the American manufacturers because they're not going to be able to source here. You are very close to the U.S. manufacturers. You were the former Chrysler China head, right?
Right.
GM is almost silent here.
Yeah.
Ford is pretty silent. Tesla's not even here again. So what does that say about their prospects in the world's biggest market here?
Well, a lot of the content of what they build, whether it's built in the United States or any other country, a lot of the component technology comes from China. Yeah. China's been inside cars for much longer than American consumers care to realize. They're going to find out just how much cost penalty is going to come as these tariffs roll in. Will that ultimately cause companies to go and consider their supply chains elsewhere? Yeah, sure it will. But that's going to take a long time. It's going to require investment.
What's a long time?
It's going to take years. You don't replicate a multi-tiered supply chain. It's not just moving one part. It's moving all the parts that go into a subassembly into a system that then has to go along with that. So it's not building one factory. It's building a whole network of supply chain in other markets. It will happen. There will be regionalization. But a lot of that will have to be Chinese companies investing overseas, which makes them go global even faster. So I don't know if the intended consequence was to accelerate the globalization of Chinese supply chains, but that's what's going to happen.
Automobility CEO Bill Russo speaking with Bloomberg's Stephen Engel at the Shanghai Auto Show. As we head, of course, towards other market opens, this is what futures trading looks like. We'll be watching some of those semiconductor names, especially the likes of TSMC in Taiwan at the open after SK Hynix beat in the operating profit forecast and their results. But the stock is under a little bit of pressure. You can see upside in futures trading right now. The China show is next.